We trying to get paid.
Making money, make it dollar
We trying to get
y'all.
paid.
Making money,
Yeah,
make
you
it.
save and invest, stacking up checks. Let's go.
Do you believe me now? I mean, come on. Do you believe me now? 3 days in a row, monster gains all over the FANG at the open with the news last night that a treatment of the C virus using convalescent plasma had been approved by the FDA. Let's talk about the market day, ladies and gentlemen. This is the FDA, the same FDA that last week the president was accusing of being a part of the deep state. Now they've got a treatment for you. By the way, this is the same treatment that is basically bloodletting in the opposite direction. For those of you guys who don't know what that is, for thousands of years, doctors believed that to rid yourself of disease, all you had to do was drain your blood. Unfortunately, for God knows how many millions of people, they would drain their blood until they died. I mean, that's how horrible it was. And this is basically the opposite of that. So anyway, based on today's gains, to use a reference, I started this series on the 18th of August when Apple had traded to a low of $456. Today, it opened up at $515. That's a $59 a share gain in 4 trading days and a new record high. Facebook remains bulletproof. Amazon set a new all-time high. Solid open on Netflix, but we couldn't hold the 500s. Again, Netflix having a hard time. My 25 and 10 moving average is not lying to you. Netflix is having a hard time here, right? Don't talk to me about a pullback right here because by the way the SPY closed today, I mean, the shorts got a new asshole as they went into the close. I mean, that was just cruel. I mean, go ahead and pull up the SPY. Look at the 10-minute chart. I mean, damn, can we all just get along? They killed any short seller into the close, setting a new high. And to add insult to injury, as of the recording of my commentary, the market is higher after hours, signaling another big gain in the open tomorrow on the S&P 500 as well as possibly the NASDAQ. Today's biggest gainer was a shit ticker called SGIX. It soared over 160% today when news was released that it was buying a smaller competitor. I mean, these were two unprofitable, pathetic companies buying each other. I was surprised it caused that much noise, but looking at the price action on that stock today, it tells you everything you need to know about how much value people think is going to be created here. It was literally a hot potato all the way into the end. Housing stocks continue to put up very impressive results here. I mean, you can track it by the index HGX, but Home Depot, HD, Lowe's, that's, those are more than sensitive enough to the hype right now. The ETF XHB gets you right into the best home builders as well. If you're looking for quick money, you can also look at the leveraged ETF NAIL. That's a good one. SPG, as I mentioned on Friday, really did its thing today. I was really impressed with SPG, Simon Property Group. Small spike on the dollar, but it didn't have any effects on international stocks. Looked at FXI, as also the Brazil ETFs. They all did somewhat pretty well today. So for all the hoopla, are we back, right? Are we finally leaving our homes? Is everyone going back into the office? I saw crude move up as well today a little bit. And, are people, people are saying, Sal, look at the bounce today. 5% in MGM, 5% in, those delicious Red Robin gourmet burgers, ticker RRGB, 7% gain in Play, Dave & Buster's. Personally, the answer is no. There is still not a cure for this. And if I'm you, I'm still long the FANGs. I'm still long tech outside the FANGs. I just don't think it's completely time to also sell some of the biggest beneficiaries of the pandemic. Let's go over some of those right now because I haven't really talked about them in this series. Let's talk about Zoom, ticker ZM, up 14%, 72% for the last 3 months. Let's talk about Peloton, 8.1% for the month. 60.3% for the last 3 months, a gain of 144% over the last 6 months, right? OSTK, remember Overstock.com? I bet you nobody in here who's listening to me right now uses that website. It's up 118% for the month, up 1,382% over the last 6 months. You got a company like Livongo, 142% for the month, 427% for the last 6 months. Big Lots, 116% over the last 6 months. HZNP, I believe that's Horizon something. That's up 116% over the last 6 months. All right. This is what I don't believe. I don't believe that this is the end of those stocks. Now, you need to have that on a list somewhere, because if they come out with a real cure, I mean, they say this is it, this thing is done, then you need to have those tickers ready for you to buy puts on. But with what we saw Delta come out with and say today, that they are going to be letting go, furloughing 1,900 very well-trained pilots. That tells me that, an ETF like Jets needs to be shorted. It needs to be shorted. You need to look at a lot of those airlines and say, hey, maybe like every other time when we were told that a new drug or a new advancement had been made in the search for a vaccine, those stocks ended up selling off. I mean, how many times were we juked by mRNA? How many times were we juked by Johnson & Johnson? How many times were we juked by some other healthcare company coming out and saying that they've got this and that in regards to this virus? Only to eventually see all gains in the financials, all gains in the, small caps disappear. And this, in my opinion, is going to be another opportune time for a smart investor to look at those gains and to short them. This is just another opportune time to reassess some of the stocks that, again, have led us here, and to say, okay, which stocks are going to have the next leg higher? And again, you can use a trading strategy, a systematic one like a moving average strategy, to make that decision. Now, stay away from Zoom right now, because if I'm correct, I believe it could be crossing over, if not already has crossed under the 10 and 25 moving average. So stay away from that. But don't be a doubter. Right? I know a lot of guys who've been sitting out for a very long time hoping for a pullback. Trust me. I mean, you can go back on my tweets. I was praying for a continuation of the downside move all the way up until early April, only to see that my trading system continued to tell me to get long equities. Get long equities. When I saw that 10 and 25 crossover on Apple, crossover on Zoom, crossover on Netflix, crossover on Tesla, crossover, you name it. If it was valuable and people bought it, it's higher right now. I've taught you guys how to do bull put spreads. Many of you knew how to do them yourself. Whether you're taking credit or you're doing the debit spreads, you can't lose. Pull up the S&P 500 right now, SPY. Pull up the Qs. If you're buying, right? If you're buying the in the money calls on that, go in as cheap, or as go in as deep as you can, preferably. All right, 1% is good enough. 1% or more beyond the end of money, wherever that's at. You've won, at least in my opinion, 10 out of the last 12 on the weekly chart for the S&P 500. Look at the Qs. Crushing bull put spreads. Apple, crushing bull put spreads. Tesla, that's a whole nother world when it comes to the call options on Tesla. Those spreads have been insane, right? There's really no other place to be right now. There was a small study that came out today that showed bonds today are virtually, no longer a useful tool to diversify, because there's just no interest being generated there. Ladies and gentlemen, this is just the beginning. I think we've got another year, 2 or 3 years of this kind of price action. Don't be the guy waiting for the pullback. It's not coming. It's not coming. And if it is, I need you to show me the data to show that. Because if anything, we're not, out of the woodwork, right? We still got a lot of shit going on there. But things are better than they were in March. All right? The data for the jobs is actually, leveling out here. Coronavirus cases are actually decreasing here. So we've got everything that justifies, not only another leg higher, but, man, another year higher if we come out of this. Because you got to remember, most of these companies for this particular earnings cycle did not give guidance. So there's no way for you to say, well, they're not going to meet this year, or they're not going to beat. They didn't give you any guidance. So whatever they put out is going to be good, and you're going to have to take it as good. Right? They gave you no guidance going into the next quarter. So you got to understand how they're spinning this right now. Uncle Sam has decided that the most efficient use of capital right now is to just hand it over to the investment class. And as a member of the investment class, and that's anybody who's got a dollar in the market at work, you've got to have your hand out and say, Uncle Sam, give me all you got. This is not the opportune time to be, playing shit tickers. This is not the time to be trading stocks that, have no volume. This is not the time to be trading stocks that are illiquid. The same thing. But trading stocks that have no analyst coverage. I mean, you need to be in the stocks that are making a big part, or are a big part of the S&P 500. Let's just go with Apple. 16% of the S&P 500. All right. That 4-for-1 split changes things today. All right. Now that's going to be now United Health making up a big part of the S&P 500. But I'm willing to bet that Apple hits $3 trillion before it gets back to the billions. Let me say that again. I'm willing to bet that Apple, now with this stock split, will hit $3 trillion with the new added capital that will come in, that investors, like your neighbors, like your cab driver, like the local Uber driver, will say, man, I can afford to buy Apple now. I can afford to buy in to one of the greatest companies in the world right now. Yeah, this thing is going to $3 trillion, folks. You've got to understand how the game is being set up. The only people who are set up to lose are the people who are overthinking this. The people who are not using a strategy, a time-tested strategy that keeps you in trades that are going higher, but overthinking it and thinking something's going to fly out of the sky and crash everything. It just doesn't work that way. I mean, even with COVID-19, we all saw it coming. You saw it in the chart. I mean, so if you made a shitload of money for 3 or 4 years going into that sell-off, you still got time. You still had time to get out, particularly if you're not a billionaire whale. I mean, you could have got out, put up any moving average, and you could see that. Right? You made a ton of money going into it, and you could have saved yourself going out of it. I don't want to keep this going as a rant, but I just want to say how excited I am about the next leg higher. It's your boy Sal. Another trading day is tomorrow. Get excited. Trade well.